Good afternoon. It's Saturday, and it's Glenn here from West Pacific Market Analytics with the West Pacific Week. Hope you had a great week. We've got a lot to go into here today. I had some interesting data. We're going to rehash a tiny bit of that data from the daily morning coffee video I put out the other day. And there's so many places to go. We can only get into so much. So I'm going to go over what I was able to put together here. There's just so much data we're sharing on the member platform. Again, that is at our Discord membership platform. I can send you some information, including a slide deck that gives a description of what we're all about over there, what the rules are. On the Discord site, everyone is welcome to come on to the chat board and speak, and we have quite a few very professional members that share. And we talk things over. There is no conspiracy talk over there. We only talk markets. There's no politic talks over there. It's clean. It's full of business, professional. We are there to make money, and that's all we're there to do. So we don't get into anything but data modeling. We only want to talk about really what's going on and get our opinion out. So if you want to get a hold and find out about that, destinytrading@gmail.com, get a hold of me over there. Now let's not waste time. Let's get right into this. The disclaimer, this is for educational purposes only. Please always manage your risk and be very careful when trading these markets. It's going to get crazy ahead. Now let's just go here really quickly. Let's go into some of these models I was sharing. Again, I'm telling you right now, this idea that the markets can go higher, this idea that the markets can have a major move lower, it's not necessarily going to be a crash move, but we are heading lower, and it is going to be aggressive. We cannot get higher here, okay? And I want everyone to understand that there is no opinion in everything that I do. I've spent 17 years putting together my own system, and it's taken so much work. You can't even imagine to get here. And not only that, but is 100% rule-based. So it takes out all emotion. It takes out all opinion, and it is only based on the rules that I tell you what they are saying. So you can see here, you notice when the red came here, we can go all the way back in time. We can push this back. We can bring it forward, and it doesn't matter. You can see right here how this red, and this is the market in blue, and you can see how this red is pricing perfectly in this thing that I call the V channel right here. Here's the bull cross. Look at this. The bull cross right here on the 2009 low. And then we knew on the bull cross that eventually this red indicator is going to have to price up because the V channel is up here. And look, eventually it did come all the way up and it rose to the V channel. And then we had the bear cross, and now the V channel's over here. So really, here was the V channel here in this big open area. Here was the V channel here in this big open area. Now we're over here. So you notice once we came up outside of the V channel here on this bear cross, we came back down and we priced here in the V channel. Now, of course, we can price all the way down here to this dark line. We can price that deep, but we only need to price in the V channel. So this next move is going to take this red indicator right back down here. It has to go back into the V channel. It's amazing it was able to pop out again like this, but the reason for this is it's not based on one model. It's based on the pattern model. It's based on the key model that I call the pattern, and patterns are so important. Patterns are everything in market and economic analysis. The patterns are everything in life. Everything. I can remember just yesterday reading in Scripture, Abraham was setting up a tent, and God was instructing him to set the tent up in a certain pattern. Patterns have existed for absolutely long amounts of time, and it's no different when we're talking markets. So this has got to come down. We are going to have a very large corrective move. And again, we can see here we were priced perfectly here. We're now on the outside of the V channel. So this brings us back down. This red indicator, it's got to come back down in here. And once it comes back down in here, I don't think it's going to go back up outside. It's going to stay down here. But we'll see what it wants to do. We're just going to allow it to let us watch what it needs to do. Now let's just look at two main indicators here. Here's the Dow 30, right? Now the Dow 30 has to price here in the V channel. So notice all up here. Look at it rising up here out of 2020, and it's priced perfectly in the V channel. Then it broke down too low. It had to come back up, and notice it's priced perfectly in the V channel. Notice here we had a bear cross in early 2023, but the price is okay as long as it's within the V. And again, the V is the directional of circulation and the momentum of circulation. Now the V channel's down here. Now price has not been able to drop. You see how price here is just holding right here? Let's pull in on that. You see how it's holding right there on that dark blue line? Well, it can't drop below that. I call it the gate because this needs to now go negative. So in other words, this needs to go from the trend being above the middle line here. You see over here, it went closed. So this is closed, this is open. This is closed, this is open. So we're still open. So you can see as long as the signal is open, it has to stay above this blue line. So notice right there, we are staying above the blue line. All right, you see it? So as soon as this closes, we can then break below the blue line, and this at some point is going to have to price back down here as long as this stays closed. So we're going to watch it, but it has to price there. So the Dow 30 is way priced wrong, and even the S&P 500 is priced wrong. You know, the same thing here, but we've got a closed signal on the S&P 500, which says this can now drop into the V channel down here. Now, I'm not saying we're going to just drop here immediately right now. We'll see how deep we're going to get, and I'll show you that in just a moment. We are going lower, and we'll see how deep we're going to get. We have our targets, but we're going to let the market decide. I'm going to show you one target model to where I feel we could go, but we don't have to come to the V channel yet. We can come down and do an A wave, have a B wave, back up, and then have a C wave down to get us down here somewhere. We'll see how deep it wants. You know, the pattern model suggests around 34.91, which only puts it to dock, and this is saying it could go deeper. So we're going to need to see, okay? It's all going to depend on the model ahead. I mean, both those models say, yes, it has to go lower. So let's just go into a few things here. Let's jump over to commodity. I shared a few things here around commodity. Let's take a look at this. Let's look at gold. I talked about gold here. And you notice here again, gold has collapsed. So here we're looking at gold and the gold miners. This is actually a gold miner model. And I just don't like this spike high. Everyone's talking about miners going to the moon. I don't see it. This has to trade back here below the dot curve. Look at the V's down here now. We can't price up here. This has to now price back down here. So I'm definitely seeing a top. And you notice on this gold miner model, just for gold, I showed this on the other video, but I wanted to include it here. This is saying that gold has to price to 2,000, right? Right around here, below the dot curve, because here's the V channel between here and here. This is the first time it's been overpriced here in 2024. This is not right. This has got to come back down, gold, and price back below 2,000. It's not going higher. It's done. It's not my opinion, okay? So I mean, I think that's kind of important. And then we were looking at some trades here in Dust, and we were analyzing GDX and all that. So we'll look at that. Let's go here. Let's just work our way down the list. Let's look at Bitcoin. Bitcoin's rolling over. So let's look at this model here on Bitcoin. Again, let's take our opinion out. I've never seen anything more emotional than the Bitcoin trade. There's no need to be emotional. Have a model. This is Bitcoin in red, okay? You can see going all the way back here into 2020. Look how perfect it's trading here. It's coming down into the blue. Now, this is a velocity model. This measures the liquidity, but not so much the liquidity. It's measuring the momentum of the liquidity. And we'll look at another liquidity model in just a moment. So it's measuring the liquidity of the move. And you can see here when the liquidity was coming out, you notice here, look how perfectly this came out of the 2020 low, and look at it right up the velocity and right up the trend. And then it started to peak out here, started to peak out as trend kept pushing. And then once the trend broke, price broke. But you notice this velocity was still up here still. So it came back up into the velocity, and then the velocity rolled over, price rolled over, and down it all came. So look at it flowing right down the velocity, the trend breaking down, and then we got down here, trend started to rise up, and we started to rise back up with the trend. And look at it, follow, because this was a great buy, because where is the V channel? It's up here. We're priced up in the V channel perfectly now. Now what I'm expecting to happen again is we're now going to break out of the V channel, and then we're going to rally back up. So this is going to set up another low in Bitcoin and another rally back up. So we're going to have a trade down here, and then we're going to have a beautiful long trade going back up here somewhere out in 2026. And then we're going to have to see how this all tops out. But this is a topping formation here. This isn't Bitcoin is going to 200,000. Get that out of your head. It's impossible. So notice now that the trend has rolled over. Notice the velocity has only just started to roll over, and we're going to break here soon. And I'll show you in a moment why we're not breaking, because everybody is still holding out. But notice we're priced perfectly here. Now we're going to have to see. I mean, we've got the trend going down. We got the velocity going down. We can start to break, but not too aggressively yet. We're going to have to see how this sets up. So Bitcoin's kind of in a holding pattern. It's got a nice little head and shoulders formation up here. Here's your shoulder. Let's see if it comes down and what kind of shoulder it wants to go here. I've got a target at about 33,000 right now to see if this gets down to it. And we'll see what it wants to do. Again, here is another velocity model of Bitcoin, a little bit different. You can see here when we were really red, everybody was selling. And look at Bitcoin coming right down, all that aggressive selling. Here's the signal turned. We came back up, and the signal is now bearish and has rolled over. But notice there's not really that much of a negative flow yet. You see we had a little bit of selling going on here, a little bit of selling going on here, but you can see it's nothing like the selling we had back here in 2022. So we're going to want to watch. And right now you can see it's holding above the gate because you see the signal here. It closed a tiny bit, but then it went back open. And notice the entire time it's been open since right here, it's been rising right up the trend. So we'll see how it wants to perform, but it's got a bear cross here. The signal's turned over, and there's still, the volume is still okay. You notice it just kind of going sideways here. There's not a lot of buy volume. See, this is a big spike in buy volume here. Here's a spike here in buy volume, and we're just flatlining. So, I mean, at the best, it looks like it just wants to grind there. I don't see it. It's not going to go higher, okay? Now let's get into a couple of the key weekly signals. I put up 2 here. We could go some of those, but let's just put, these are my 2 key ones. This is the compact signal. The compact signal is still going lower into this big grinding trend here. We're still moving down to the 26A target, and then we're going to rally back up. Okay, so the signal is still on. It's still bearish, and we're still bearish on the compact signal, and we are still bearish on the SPX signal. You notice the trend's still breaking down. There's no turn in the signal. You see that little blue line coming down right here? You notice it? Look, right here. You see this blue line? So you notice when we get a rally, you see back here when the blue line moved back up, here's where it ended. But you notice even when we were coming down here, every time the blue line turned up, we had a rally. The blue line turned up, we had a rally. So, but we could have these spikes down. You notice we get these spikes down as we had a bigger build here and the entire move down. So it doesn't mean that this is going to set up where we had this quick sell off to 4,100 and then it rallied back up. But what's so amazing about this model is you notice once we came out of this spiky trend here and this blue, just this trend rose back up, you notice price just rose back up. It didn't rise right to the trend. And then notice here, it almost rose right to the trend. But notice, as long as this didn't break, price never broke. So I've been back testing this theory, and it's really turned out to be solid. So right now, the signal's still on. There's no signal that says this 4 weeks of chop is anything more than just a pause or what I call a catching up to trend. So the signals still look pretty aggressive. Now let's go here real quick. Let's see how much we can get into this. We're at 13 minutes right now, and I want to get into a lot here. Because I think it's really important. Now, I was going in the finance area here because I'm seeing something here in the banks that I think got me a little worried. Here we go, right here. Let's look at this model here. This is the banking sector, and this is a bearish continuation pattern. Notice it's a falling 3 formation. We got a huge black candle, and then we got 3 weekly sticks, and that matches this 4-week grind that we've had up here in the SPX. So this is a bearish continuation pattern. What this is suggesting is we're going to have a big black week next week in banking. And that's the continuation now of this downtrend that's ongoing. And again, notice that we now have the gate open and we've broken below the gate. We need to price down here in banking, okay? So the banking is getting weak here in finance and is ready to break lower. And we got a bearish continuation pattern there, which I find very interesting. And we see the velocity coming out in the banking sector as well. Okay, so, this is going way back in time. This is the 2009 move down. You see the 2009 move down here in banking? Now it just came right down the trend. And we can see now that we've got a big head and shoulders formation here in the banking. Look at this. Here's your head, here's your shoulder, and here is your neckline. And notice the trend has now left the V channel, which is going to allow this to break down and come down here. We'll have to see how aggressive this can get. But this is it. This is a massive head and shoulder, right shoulder formation with a tiny left side, right side. The topping pattern of massive head and shoulders here in banking is just completed. I find that really interesting. Now let's look at the finance model. This is a great finance model. You can see back here at the top, here's the top in the market, right here. You see it? 2021, 22. And then you notice our finance signal just coming straight down here. You see it? One bounce, came down, and that was the low of the move. And then we started back up. But notice right now that this whole time we were above from the 4100 move. You notice how this held up. Just like over here in 2020 and 2021, you see how the signal stayed above here, right here, up here? And you notice we kept rallying up in the market. You notice how this stayed up here and we kept rallying up in the market. Well, look what happened when this broke. We had a big sell-off. And here we are. Notice the red signal is still building down. Let's pull over to that. You see the red signal still building down here. You notice the trend is rolled over. You notice the velocity is rolled over. Finance is ready to continue to break lower. And we'll continue to watch this model going forward. And I will be sharing this regularly here on our finance currency area of the model. And here's finance. Look at this. All the way up here in the sky. It makes the top here in 2000 and 2007 look tame compared to where we are here. This is crazy. Now notice every time we've had velocity come out, we've had a corrective move. Velocity come out, we've had this corrective move, and now we are way up here ready to correct down again. So there's just nothing pretty right now in the finance sector. So it really, really looks bad. And here's the finance here monthly. And look, you can't go any higher here. The trend has had its first bearish candle down here. We'll take a look at the month-end report here in a few days once we get turned over into May. But you can see we've topped out. We can't go any higher here. It's all rolling over. We're as high as we can go. Now we can break into it. You see how we're priced within it. But the finance sector is about as high as you can go, man. They pushed this thing all the way up the flagpole. So it's really interesting. Do I have anything here in the globe for us today? I don't think I added anything. Yeah, I did. I added a couple. Let's go here. Global technology, same thing. You notice here we're topped out right at the top of global technology. The velocity is rolling over. We've worked our way up. The trend is breaking. We're going to be watching this going forward here in 2025. That's a global model of global technology. And here's global technology. Look at it. As long as this trend keeps breaking down, we could get all the way down here before this finishes. And we'll look at why we're kind of hanging out here, because again, that has to do with patterns of other things. Let's go look at the QQQ SPY while we're working through this, because I think there's a couple of models there I definitely would like you to see, and I want to see some of these patterns of what we're looking at as far as where we are on this. This is where, hang on, I thought I put these here. Actually, I think I had them over here in the chat. I wanted to show you these two. Here they are. I wanted to show you these two. We're over here. I shared these in the chat this morning. And I wanted to say, everybody, be prepared for next week. Now, you notice this SPX signal. You see how the red is still continuing to break down here? There's no turn in trend here. And here's this little 4-week grind here hanging well above. And you can see the huge drop we had in 2020 here. You can see the rollover in the SPX right here. And again, this is still heading lower. I mean, this could be a big drop because we should already be pricing to red. This is going to be fast. I mean, this could only take us maybe a month. I'm thinking just May. One of my members thinks maybe we're going to go till the end of June. We'll see. I've got a target of around June 6th. I think this could be a really, really fast May ahead. We're going to get, the old sell in May and go away. I could get pretty aggressive. We'll have to see. But we can see the same in the NDX, right? Priced here, and we're still breaking well below. Okay? You can see it selling off, and once this turned, the market turned, you can see it selling off, one rally, and then another low. So we're going to watch this. We're going to watch this. I was showing my members that. I think that's just a really, really great model. We're looking at this bond model. A friend of mine was asking me one of my clients was asking me about the junk bonds. So we analyze all the bonds. We look at the Moonies, we look at the junk, we look at the mortgage backs. We watch the inflation adjusted. Of course, we've got a really great recession model. I've been watching that closely, but I haven't shared anything on the recession model yet because we're not in a recession yet. It's getting ready to fire, and it's trying to move up, but we're still not there yet. No recession yet. When the recession model kicks off, I will let you know, and we'll be talking about that. So we pretty much look at, we look at the corporate bonds. We look at pretty much everything in bonds. I just don't share a lot on here. When something interesting comes up, I will. But we'll notice here that the junk now is getting a really aggressive. I got must not turn because I want to see this trend continue to break down. So you can see the market with the junk bonds, of course, just is hand in hand, right? And you can see here in 2022, when we had this aggressive move down in velocity and trend, the market dropped, okay? And you can see that every time. So right now, we've got this building down again in the junk bond market, and you notice how it's all starting to sell off here. So we're going to be watching that, and it's something that I'm going to add into my rotation. Now let's just go quickly, where was I? Let's go back over here because I included that in the SPY model. So let's take a look here at something I think is important. First of all, let's look at the SPY model. We can see this coming down, popping out, coming down, popping out. And we're just tumbling down the mountain here, right? Price is just tumbling down. So as long as this trend continues to break lower, we're going to continue to go lower. If we get a change of velocity, we'll talk about it. But as of the close of the week, there's still no change. We're just tumbling down the mountain in the SPY, and we're continuing to tumble down the mountain here in the Qs. So we're going to have to see some change in that tumbling down pattern. And if I look at the flow model here, you notice the flows are still extremely bearish here. This is the SPY, but we're looking at the option chain here of the SPY. This isn't actually SPY, this is the options. And you can see that we're right at the gate, and the model was not able to open. So I think we're done here. I think Monday we're starting back down. We topped out right here at the gate. We topped out right here at the dot curve. And we got a pretty clean count. You can make it an ABZ, or we can make it a 1, 2, 3, 4, 5 count for this A wave. So here I'm making it a 1, a 2, a 3, a 4 count. So this could be the top of the wave 4 right here, which is pretty clean. It's a choppy 4, which would kind of make sense. And now if you notice here, if I carry out the dot curve, that takes us out here till the end of June. If we carry that down further down here, right? And that would be our wave 5, a lower low than the 3 we had here in April. So it looks really ripe, it looks really set up. Now I ran some extensions. We've got a 50%, we're just above a 50% retrace now. And if we go up to this other line, do we want to push higher for 61.8? I don't think so. Now, if we run the extensions off of this existing close on Friday, I'm expecting the C wave, we'll call it an ABC in this model, because typically, since we're looking now off this top of everything being ABCs, but remember, an A wave can be 5 waves or it can be 3. So the 5 wave count on that other model would make sense. And you notice where everything's still breaking. So if we take this extension, I would say we're going to get 123 to 138% extension of the wave A, using the wave A as our extension. And that puts us down here. The 123 would put us down to 4,100. My original thought was 4,600, but I think we're going to break the 4,100 low on this next C wave down. But I'm going to set that up because, the C wave obviously will most likely be a 5 wave type move down, and that's pretty much what I'm expecting. Now, we were talking about the sectors here. We really, really like 2 sectors, and I think that makes sense with everything going on right now. Of course, I like that finance trade, so we're looking at the FAS trade. We're looking at healthcare. Healthcare looks kind of ugly. We're talking about a short in the healthcare area. And then we're also looking at shorts within this consumer goods. I mean, if you can see here, the consumer services, I should say, and the consumer goods both. But you notice the V channel is all the way down here. We got a very nice head and shoulder formation. Now, we don't try to chase the absolute top on a short. We only want the meat of the move. That's all we're interested in. We want to enter a trade and then chase the meat of the move and then close our position. So we're chasing shorts in both consumer services, and then we're also chasing a short here in the consumer good area. And the same idea. You can see this nice head and shoulder pattern with the V channel way deep. This has got a price down here and will. There's no question about it. So that was a couple of shorts we're chasing. I was lining those out here. I mean, the potential here, we're looking at the consumer goods through the SZK, which is an ETF. Now we need this gate to go open. So it's not going to be able to rise yet above 1239. So we're waiting for the gate to open. And then the V channel is pricing this at somewhere to 30 to 48. This could have a huge run. Now, I don't know if that's possible on this final sell-off, but it could be. We're just going to have to see how that runs. But there's definitely profit to be made. and we'll see if it can go that high. So that's one of the trades we were looking at. Let's jump into semiconductors here because they're looking pretty ugly. Here's some of the new models I put up. We can see the semiconductors now have rolled over. You notice we had a little rally back up. Here's our 4 candles weekly. Semiconductors are down. Velocity's down. The semiconductors are going to go lower. They're going to continue to break. Here's another semiconductor model. We can see that we're breaking down here. Yeah, we got the V channel above, but that doesn't worry me. We can break and then bounce back up. That'll be part, I think semis are going to have a nice rally back up, but right now it's very bearish looking. Here's NVIDIA. I've got a target of 67 here to hit the gate. Now it could break below 67, but you can see all the erosion away here in NVIDIA, right? But 67 rests right there on NVIDIA. And here is a close-up look because the semiconductors are really just starting to lose steam. Look at this big head top here into the topping pattern. And you notice the velocity is just coming out, and we're priced right because see how the trend there, let's pull in on that. You see the trend line and the candle is within the trend. Now this could drain pretty quickly, but semiconductors are definitely ready to start draining. So, don't think about playing something like NVIDIA long or something. You don't want to be doing that. That would not be a very smart move right here. Top internals, I was doing some studies here of the pattern, and I don't know if I necessarily want to go into that. Let's see. Let's pull up one study of this pattern I found really interesting here. Was that the one? That was one of them. There was one I found more interesting here. We were just looking at some of these studies. Here it is. Look at this study here. This is great. Look at this going all the way back to 1996. And you can see in the pattern model, here was our big sell-off in the year 2000. You see how it's all dropping into this valley here down to the V channel. And then here was our sell-off in the 2007. You see the velocity coming out. And again, this big spike down and trend spike down and trend spike down in velocity. And we can see now that we're starting to get this all rolling over again and we're priced way up top here. So we're going to be watching this. This is just, if I don't want to take too much time on this right here, but there's a lot we're watching. This is all rolling over and the pattern model looks ready to break lower. The trades, we won't go into that because we were just kind of going and we're kind of running out of time. We're getting long-winded here. Here's the bond model. You can see these valley ideas again. Notice the valley here, notice the valley here, and again the valley here. That was the one I showed you that we were looking at on the junk bonds. Here's the Moonies, same idea, looking pretty aggressive down here. So I think the whole bond complex is ready to have the junk. Look, junk's giving a signal up top here. So the bond complex looks pretty much ready to go. So that's about it for today. I'll have a lot more for you as we get into the month-end report. We're running rather long here, 27 minutes, so let's just close this off quickly. Have yourself a great rest of the weekend. I'll be back at you with some daily updates next week as we get into month-end. Around the middle of the week, we get into early the start of May. I'll have that monthly report out you where we'll look at a lot of the global big picture models, and I think that'll be interesting. So thanks for tuning in. Sorry it's taken so long. Hit the like, hit the subscribe, but I feel we're at a very, very important moment in time here. Next week could be a pretty aggressive red week to the downside. We're close to starting. If not, we want to get a little bit more, as I said, to that 61.8 retrace, bit higher and then down, but prepare, get your house in order. We're ready for the big C wave to start down soon. See ya.